Watch this now. If you save it for later, it'll be pointless. Warren Buffett penned his final farewell letter as CEO this month. This is the very last time he will ever write to us. They say the tongues of dying men enforce attention like deep harmony. But you'll find something strange. The 95-year-old actually waded into politics this year. In his annual letter to shareholders in February, he warned that if fiscal folly prevails, the value of the dollar will evaporate. Immediately, many rushed to interpret this, saying that even Buffett now believes the US dollar is headed for worthless. But at the same time, they turn around and show you this chart, telling you that Buffett is sitting on the largest cash pile in his history. How does that make any sense? If you genuinely believe the dollar is turning into worthless paper, why on earth would you sell your house, stocks, cars, even your designer bags, cash out, and hoard massive amounts of US dollars? That would be insane. Shouldn't a rational person immediately convert the dollars about to become worthless into other foreign currencies? Or buy safe haven assets like gold? But Buffett actually did this. So, is the old man just being overly patriotic? You jump, I jump kind of loyalty? Or is he lying? Is he truly, as he claims, building this cash hoard for his successor to deploy? Or have most people simply misunderstood him completely? I'm telling you, it is not contradictory, because this is going to be the greatest setup of the century. Many people say investment is risky, but in Buffett's setup, you will find that for those with true foresight, it carries no risk at all. What do I mean? Hello everyone, I'm Money Zen. The chart most people are looking at is meaningless. Why? You say Buffett is sitting on the largest cash pile in his history, but tell me, which year has he not sat on the largest cash pile in his history? Look back closely. His cash pile each year is almost always larger than the year before. It's simple logic. Think about it. You start with nothing, not a single cent. But last year, you turn your luck around and make 1 million from investment. Aren't you now sitting on the largest cash pile in your history? Then this year, you make another 3 million. Aren't you still sitting on the largest cash pile in your history? This only proves one thing. Buffett keeps making more and more cash. Furthermore, 20 years ago, holding $1 million made you a millionaire. Does $1 million make you wealthy today? A decent house costs $1 million. So now that you need billions to be considered truly wealthy, isn't it normal for Buffett's cash holdings to grow larger? So the chart we really need to watch is this one. It's simple. It shows the proportion of cash that Buffett holds relative to his total assets. In other words, if I sell assets for cash, the cash portion of my assets increases, right? So the blue line goes up. If Buffett buys assets, it's the opposite. The blue line goes down. This is the only chart that matters. If you have $1 million and $10,000 in cash, your cash ratio is 1%, right? But if you only have $20,000 and $10,000 in cash, the ratio is 50%. Therefore, to truly see if Buffett is buying or selling assets, we must look at this chart, and you will be shocked to discover exactly why Buffett is the Oracle of Omaha. For example, in 2005, we see his cash ratio rising higher than before. What happened next? The 2008 financial crisis. In 2008, his cash ratio plunged to an extreme low. This means Buffett sold assets and built up his cash war chest 3 years in advance. And when the crisis hit, the cash ratio bottomed out, meaning he spent that cash buying assets at the bottom. The fastest Buffett has ever made money in his life was from buying the dip during the 2008 crisis. The same play happened during the 2020 pandemic stock market crash. He had actually started slowly selling assets years before, so his cash ratio kept climbing higher and higher. Then, after 2020, his cash ratio bottomed out again, meaning he once again bought assets at the bottom. Then, during the 2023 Fed's rate hikes, you'll notice his cash ratio has climbed back up again. Currently, his cash ratio is exactly the same as it was in 2005. Can we reasonably infer that Buffett is now saying he is saving all this cash for his successor to spend? If you come to that conclusion, you should ignore what Buffett does and just blindly buy stocks. Because in 2000, Buffett missed the internet. Stock boom. These past 2 years, He also missed the AI stock rally. But what if your conclusion is different? What if Buffett is preparing to use his enormous cash pile to buy the dip, just like he did in 2008? If you believe Buffett has spent a lifetime proving that going against him rarely ends well, then in your entire life, you really only need to read the letter he wrote this past February compared to his final farewell. The February letter told us a lot. It hints that a bottom fishing opportunity like 2008 might be the last of its kind. Yet, an opportunity like that is all we need in a lifetime to multiply our wealth many times over. If you don't want to become a victim this time, or even want to climb to a higher class, then you should subscribe to my channel because I'm going to be giving you more information like this. And if you're worried you'll forget everything after hearing it, and you don't want to waste your time, you can like this video and it will be automatically saved in your playlist, so you can come back and follow it anytime. Firstly, why is Buffett warning about the dollar becoming worthless while simultaneously selling assets and raising cash? It's actually not a contradiction. Why? Technically, what Buffett holds a massive amount of is not US dollars, but short-term US Treasury bills. Because T-bills mature in 3 months, or at most a year, and he can sell them anytime, instantly turning them into cash. That's why T-bills are called cash equivalents. Think of it this way. Are water and ice the same? They seem similar, but they are also different. Cash is like water, T-bills are like ice. Once melted, they turn back into water. So, Buffett holds a massive amount of cash equivalents. US dollars are only a part of this. He holds much more in T-bills. So when US interest rates rose, Buffett sold stocks and took the massive amount of cash from those sales and lent it at high interest to the US government. What he holds are essentially the US government's high interest IOUs. And the US government? Because the world is reducing its holdings of US Treasuries, fewer people are willing to lend money to the US for 10 or 20 years. The price of long-term T-bonds has plummeted in recent years. When the US government is short on cash and no one will lend to it, they have to borrow short-term usury from capitalists. Buffett did lend money to the US government, but he won't do it for 10 or 20 years. He demands the US government pay him back principal and interest in 3 months, 6 months, or at most a year, and with a juicy 4% interest rate. That was Buffett's step 1, lending out money at high short-term interest. What is his step 2 now? It's to tell you the value of the dollar could evaporate, right? Many people only see the second half of that sentence and jump to a conclusion. They never look at the first half. Folks, if I say, if you keep eating sugar, your teeth will rot, it's the key point that I think your teeth will rot. No, the point is, I'm warning you to stop eating sugar anymore, right? Similarly, Buffett said the dollar will become worthless paper. It has a precondition. It has the first half, which is if fiscal folly prevails. Then the second half, the dollar's value evaporates. In other words, Buffett isn't actually warning us that the dollar will become worthless. He is warning the US government that if you don't act now, the dollar will become worthless. So Buffett is pressuring the US government, telling them it's time to act. Do you see the difference? What action does Buffett want the US to take? The US government is facing a simple problem. It's running out of money and is struggling to pay back what it already owes, right? I won't explain this further. So what can you do to solve this? First is to increase revenue, make more money, for example, raise tariffs, but money isn't easy to make. Whether it works or how much it brings in is uncertain. So what it can do is reduce expenditure. In the past, the fastest way to cut expenditure was to lower interest rates. If the US cuts rates, the government's debt shrinks instantly, right? But when interest rates were already high and still no one was lending, who would lend if you cut the rates further? And because of this, even though the Fed cut rates twice before, still no one was buying the US Treasury. So the old trick of cutting rates to instantly reduce spending is now ineffective from overuse. It's like medicine. The first time you are sick, 1 pill works. The second time, you might need 3 pills. By the 10th time, even 100 pills won't work because you have built up a tolerance. So there's only the second way. Let the Fed engage in quantitative easing. and lend money to the US government to spend. If they do this, the dollar will depreciate. Then America's debt will become worthless. For example, I owe you $100, but because money was printed and the money supply increased, the dollar will depreciate. The old $100 is now only worth $50. So the $100 I originally owed you is now equivalent to me only needing to pay you back $50. By the same logic, if the US government borrows 100 and pays back 50, who would ever lend to you again? When no one is lending to the governments in the end, you still have the one and only solution to continue having the Fed print money and lend it to you, right? At that point, the dollar will be massively overissued and truly become worthless paper. Here's the crucial one. Buffett's unprecedented warning to the US government this year, urging them to act, is actually not a push for continued rate cuts, not an immediate call for QE. It is a command to find buyers for the US Treasury first, and then cut rates and print money. There's only one way to do this: make the US stock market fall. Why? It's simple. When we do assets allocation, when the US economy is good and companies are making huge profits, shouldn't our investment strategy be aggressive, investing in these company stocks to share the profit? When the economy is bad and businesses aren't making money, if I invest in their stock, I am sharing the loss, right? Therefore, I will shift my capital to assets that bring stable returns by buying US Treasuries and lending money to the US government. In other words, the US stock and the US Treasury are a seesaw. Right now, the world's money is being piled into US stocks because the US economy is perceived as the best in the world. Therefore, if the US stock market is made to fall, that money, seeking a safe haven, will shift to US Treasuries. In other words, force the money currently in US stocks into US Treasuries so that there will be people willing to lend money to the US government. How much money needs to be moved? The US needs to borrow an extra $1 to $2 trillion every year. So, doesn't that mean the US needs to drain at least $1 to $2 trillion from the stock market to fill its debt hole? If $1 or $2 trillion are drained from the US stock market, could that cause a crash? And when everyone rushes to buy the US Treasuries that Buffett is holding, won't their price surge? At that point, can Buffett sell his soaring T-bills at a high price, then immediately take that repaid loan money and buy up the high-quality distressed US stocks at the bottom? In the end, once there are buyers for US Treasuries, but the stock market has crashed, can't the Fed legitimately engage in QE to save the stock market? And won't that fresh printed money flow through banks at near zero interest back to capitalists like Buffett, allowing them to further buy the dip and push prices higher? It happened in 2000. It happened in 2008. It happened in 2020. So what about this year? In other words, Buffett gets to siphon money 3 times. First, during high interest rates, lending short-term, high-interest debt to the US government. Almost zero risk. Second, when US stocks crash and treasury prices soar, sell his soaring treasuries at a peak. Third, when the Fed engages in QE and cuts rates, he can borrow money cheaply, then buy the fire sale US stocks at the bottom, pushing their prices higher. So, how can the US government possibly act to force money from stocks into treasuries? It's simple. How do we judge if the US economy is good or bad? By looking at the New York streets? Of course not. We look at economic data. Even last year, when we all knew unemployment was severe, with homeless everywhere. But the US employment data still met expectations. So who releases this economic data? The US government. Let the results speak for themselves. Recently, excluding the data not released during the shutdowns, almost every piece of US economic data has been terrible. US housing index, manufacturing index, services, PMI, etc. all blowing up. Inflation is also up. On top of that, those giant US corporations are continuing massive layoffs. The US government itself is doing massive layoffs. That means whether you are a corporate elite or a civil servant, what you face is possibly getting fired. So the expectation of unemployment is rising. When people have no jobs and their income decreases, the US Consumer Confidence Index has hit a multi-year low. So what does all this data indicate? It means the US government is openly telling you the US economy isn't doing well. We may be heading into a recession, and then the US stock market shows this result. And US Treasuries, they started to rebound and rise. Economic recession is just the root cause for a US stock market decline. To trigger a full-blown crash, we need a black swan event, like the Lehman Brothers in 2008 or the pandemic in 2020. So what potential black swans exist this year, such as the AI bubble, commercial real estate? But honestly, these are no longer matters anymore, because these are just excuses to crash the market and create panic. The real reason is to force the world's money currently in US stocks into US Treasuries. That's why many believe that if you just put money in the US stock market and hold long term, you'll never lose. In fact, if you don't understand investing, Buffett himself even recommends buying broad market index funds like SPY, QQQ, or VOO, right? Yet, Buffett sold the few SPY and the VOO shares he held last year, cashing them all out to hold massive cash reserves. What does this mean? It means even the Oracle of Omaha, seeing a train coming down the tracks, will step aside. In other words, investing requires timing and momentum because the economy has cycles. Imagine you are told about a stock you can hold for 5 years to double your money, guaranteed never to lose. But after you buy it, it plummets. For the first 4 years, would you keep holding? Let's say you really hold for 5 years, but it keeps falling. Would you sell now? If you sell and it truly doubles in the 6th year, what then? You not only waste 5 years, but your money depreciated significantly in those 5 years. And you couldn't sell to seize other opportunities, because once you sell, you'll lose money, right? Look at China's former stock leader, Alibaba. It fell for 5 years. It's finally rising now, but hasn't reached even a third of its peak price. So, is timing and momentum important? Buffett was very direct in his letter, telling you, our investment strategy remains overwhelmingly concentrated in the United States, with one small but important exception. Our investment in Japan continues to increase. This means Buffett uses his right hand to drain the US market, and his left hand keeps reaching into Japan. What does that mean? As mentioned before, when interest rates in Japan were extremely low, Buffett directly issued bonds there, borrowing money. Then he used this borrowed Japanese money to acquire 5 major Japanese trading companies, make the Japanese people work and make money for him. Then look at his February letter to shareholders this year, and you understand why this investment can't lose. His exact words were, "Greg has met many times with them, and I regularly follow their progress. Each of the 5 companies increased dividends when appropriate. They repurchase their shares when it is sensible to do so." What does this mean? First, Buffett is now the most important shareholder in the 5 trading companies. These companies are essentially working to serve and make money for Buffett. So Buffett sends his successor, Greg, to meet with the 5 trading companies, and he monitors their progress from afar. This ensures that even in his old age, he can supervise these companies and even influence their management and decisions. This guarantees these companies won't easily fail. And here's the important part. The 5 trading companies promised to increase dividends when appropriate and repurchase their own stock when appropriate. What does it mean? Increase dividends when appropriate. Go look at it. These 5 trading companies have been continuously raising their dividends every year. The dividends they currently pay Buffett are 7 times the interest rate on the loans. That means when Buffett collects Japanese dividends, he could collect $7 while paying back to Japanese. He only needs to pay $1. Even more crucial is these 5 trading companies will repurchase shares when appropriate. Guys, what's the appropriate time to repurchase shares? Of course, when the stock price falls. More directly, Buffett bought the 5 trading companies' stock, and the companies promised that if the stock price drops, they will use company funds to repurchase the shares. Simply put, it's a backstop and hold the bag. Don't let the stock price fall. And because of that, these 5 trading companies have already surged by 80%. Why? If you are an investor or a fund manager today, and Buffett has positioned himself in a stock, Shouldn't you follow suit? It's simple. If you follow and lose money, you can tell your clients. It can't be helped. Even the Oracle of Omaha lost money. But if you profit, it's all your credit. Furthermore, these 5 companies promise to provide a backstop. If the stock price falls, then what is there to fear about losing money? In fact, Buffett's investment in Japanese stocks over the past few years attracted many foreign funds to follow suit. The Japanese stock market surge is largely driven by foreign capital, which means most of the money from the rise of Japanese stocks was not earned by the Japanese. What if these people hadn't followed to buy Japanese stocks? What would Buffett do if the Japanese stocks didn't rise? Besides earning dividends, he could profit from the appreciation of the Japanese yen. In previous years, the US hiked rates while Japan cut rates. Many people borrowed money in Japan and saved the money in US banks to earn high interest. Because of this, everyone is selling Japanese yen and buying US dollars, which caused the Japanese yen to plunge. Until last year, when Japan raised interest rates, money began flowing back from the US to Japan. The Japanese yen instantly surged by 15% back then. This means that even if the Japanese stocks Buffett bought didn't move, if he simply sold the shares and exchanged the yen for dollars when Japan hiked rates again, he would still earn 15%. And this is just the beginning. As I said earlier, if the US stock market crashes plus Japan continues to hike rates, countless capital will accelerate their withdrawal from the US back to Japan. At that point, we can't definitively say if Japanese stocks will rise, but the Japanese yen has a high probability of surging. By that time, Buffett wouldn't even need to sell his Japanese stocks. He could just use his shares as collateral to borrow the appreciating yen, exchange it for the depreciated US dollar, and then bottom fish the crashed US stock market. The entire logic is simple. When the US dollar appreciated and the Japanese yen depreciated in the past few years, Buffett reached into Japan, borrowed Japanese money, grabbed a bargain of Japanese companies, and extracted Japanese cash flow to build his ammunition depot. When the US stock market crashes and the dollar depreciates, he can swap the appreciating Japanese yen to the depreciated US dollar, and then buy the dip on depreciated US stocks. He has always played this seesaw. When you are rising, I position myself in the places that are struggling. When you struggle, I come back and buy up your assets, and the money he makes is always guaranteed profit. What he buys is companies, not just stocks. This means he can negotiate with the company and even decide how much money and how many dividends they pay him. So a lot of people laugh at Buffett, but think about it. If the US stock market and the US dollar crash this time, who will be the biggest beneficiary? That's why, starting last year, we began positioning some of our US dollars into the Japanese yen, gold, and Bitcoin for safe haven. And for US stocks, we use a guerrilla warfare strategy, focusing on short-term trades. The logic is the same. We are building up our ammunition, just like Buffett. We are waiting for the US stock market, which is currently undergoing correction, to reveal a clear direction and trend. Will it crash as we infer? Or will it rebound after the adjustment is over? The outcome won't affect our next moves, because either way, we can then take the money earned in other markets and reposition in US stocks. For Buffett, the US stock market is a primary battlefield. For us, it's the same. If the train of crash is about to hit us, we'll definitely exit the market first, protect our principal at all costs. Technically, Buffett is a whale, and we are retail investors. Our methods and plans are different, but in fact, the strategy of investment is fundamentally the same. Will the situation unfold as we have inferred? How will we adjust our positioning later? Due to time constraints, I have to end here. But what do you anticipate in the next episode? A lot of people are waiting for this line every week. It's gonna be a crucial one. Alright, I'll continue sharing tips on how to become wealthy, how to be an entrepreneur, an investor, and achieving financial freedom every Sunday at 8:30. If you don't want to miss out, make sure to subscribe to my channel and click the little bell and generously share this video. I sincerely wish all of you who like this video will reach financial freedom soon. As long as you can find 1 or 2 useful sentences in today's content that can help you live a better life, I'll be completely satisfied. Alright, I'll see you next week. Bye.